Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to make big profits trading Forex. Well, first of all, what not to do. And that's to trade at 100 to 1 or 200 or, God forbid, 500 to 1 leverage. You can't go into this thing over leveraged just because it's there. Almost every video I talk about this, and for those of you that are fortunate enough to hear it enough times, maybe you'll come to believe it. You can make a lot of money trading Forex, but not if your risk of ruin probability is very high. And if you trade with high leverage, your risk of ruin is very high. At the core of risk management is to take small losses and use your win-to-loss ratio as you improve the quality of your trading to make not only more winning trades per losing trades, but also more money when you make those trades. Those don't translate into big profits. Those translate into consistent profits. If you are reading trading literature and you are reading the accounts of large successful traders and what they have to say about their trading, they'll tell you that probably 80% of their yearly profits are made in maybe 2 or 3 months. Now, that 2 or 3 months could be in a consolidated 2 or 3 months, or it could simply be out of the 12 months that I'm trading, maybe 60 days of that have been large profits that accumulate up. You always have to look at the cumulative effect of your trading, not on what you're doing today. If you focus on what you're trying to do today, you'll screw it up because you'll expect more from your trade. I do that all the time. When I'm not following my rules or paying attention to what I'm doing, I just see all this price action going, and I'm in there swinging my sword, trying to accumulate as much money as I can. Sometimes that works, and you can get deluded into believing that happens. When you have experience like I do, I don't delude myself into thinking that that's going to be a regular thing. I understand how to take advantage of a lot of volatility going both directions, and I'm in there and I can scalp, but I don't scalp very often. That's very difficult to do and problematic in the long term. I am a day trader, and I'll make 1 to maybe 3 trades a day, averaging out to probably 2, I think, overall. And so I have to be targeted in what I'm thinking about doing. Fortunately, I'm trading with a large enough account that this particular process works well for accumulating the larger profits. If you're trading the smaller account sizes, you're trading under, let's say, 5 lots or 8 lots, then you really need to be an all-in, all-out trader. When you enter, you go in with your full 5-lot position, and when it's time to come out, you come out with the full 5 lots. It's the only way you're really going to maximize the dollar gain for the risk that you're taking on those size trades. If you try to take a 3 or a 5 lot and break it up into, well, I've got 4 lots I can trade, and I'm going to come in with 2, and then I'm going to add 1 and add 1. You're not really getting paid for the initial risk that you're taking when the thing goes wrong, or if it goes into profit and you're fully loaded up and something goes wrong and you lose there. If you do the math on it, it doesn't work out. It's not really good. When you're trading the larger lot sizes, and I could call that 8 lots and above anyway, because then you can go in with 3 and add 1 and add 1s all the way up, or you can come in with 5 and add 3, you've got your 8. If you're trading position sizes over 10 lots that I do, I may go in with 5, come in with another 3, and then another 3, and then start adding in singles. because that initial loss stop of 5 lots on a 10 pip stop, for example, is $500. I wouldn't want to be 15 lots on a 10 lot loss and lose $1,500 instead of $500. So the 5 lots coming in on a 10 pip loss is $500. If I came in with a full 15 lot load, I'd be a $1,500 loss. Now, how do you make that $1,500 up? Well, what's your average daily winning value? What's your per trade expectation? What are your metrics? Those are only the decisions that you make on how you partition your bank lot total into the trade is pretty well dictated by your win-to-loss ratio. I mean, that's really the key factor in understanding how to do all this. But the primary guideline here is that you're not going to make massive profits just because you happen to be trading that day. You can't push the envelope. Your win-to-loss ratio will give you what your normal, consistent trading process should be. And then maybe one in every, I don't know, if you're going to trade a couple of hundred times a year, let's say there's a couple of hundred trading days a year, you make 1 trade a year, you make two trades, let's say you make 3 trades a day, 5 days a week, whatever it is, you're making 300 trades a year, 400 trades a year. So let's say out of those 400 trades in the year, 10% of them are going to be screamers. So that's 40 trades. Well, if you're doing 3 trades a day, 5 times 3, you're doing about 15 a week. 10. Let's say you're doing 10 a week. You're going to get that one massive opportunity one time a month. That's when everything's going to align for you from a probabilistic standpoint and from a statistical standpoint, not just calculated, but if you just read the literature of how these guys are quantifying their results at the end of the year. Yeah, I did 40%, but 80% of that 40% was done in a very small number of the trades that I took. It's a misnomer to say, again, that I made all my money in the last 3 months of the year, because you're not going from January to January is an artificial construct in the currency market. What does that have to do with the price action in the currency? The fact that you arbitrarily create a year from January to January. You can't really, the fact that the person says out of the 12 months of the year I made all my money in 2 of those months. They're not 2 months together, they're spread out, not only in months, but in individual positions, closed positions. So you have to keep that in mind when you're trying to think in terms of statistical distribution. It's all random. It really is all random. It's not like a train. It's got a schedule. I'm standing here on the platform and the train's going to come by and pick me up, and it's going to take me 300 miles to my destination or into the city to get to work. Price action doesn't provide that timed release of profit for us. So that we have to look at what's going to happen over the year instead of worrying about what's going to happen today. What's going to happen today, you count on based on your historical trades summarized in your trading metrics, such that you can say, on average, on a daily basis, I should be making about $500. I mean, look, if you're trading this a 10 lot or something like that, $500 is not very much money. It's 5 pips, right? So when you say, okay, on average, over all my losses and all this other stuff, I make about $500 when I trade. Okay, so your trading plan then should try to make let's say, double that. You're gonna set your trade situation up so that you can make double that. Well, if you're averaging 500, that's an average. So if you shoot for 1,000, then sometimes you're going to lose 1,000, and sometimes you're going to make 1,000, and over the course of the trading, you'll have a $500. That's where that $500 gain comes from, because it's an average. You have to understand some basic math in order to understand how to maximize your profits. So in your normal trading, when you sit down with your cup of coffee and you've got your 2 hours to day trade, and then you're going to go flat and go off to work or whatever it is that you're going to do, you're looking for $500. So you're trading a 10 lot. How do I make $500? Well, I got to get, how many pips on average do I make when I have a winning trade? Well, let's say it's, let's make it easy, 10 pips. When I win 10 pips. When I lose, I lock it down and I lose 10 pips. But I'm a 70-30 trader, so 7 times I win 10, and 30 times I lose 10. So, I'm right in that, what we call a statistical distribution of stuff. And you'll come out ahead. So I'm trading 10 lots today. How many pips do I have to make? I have to make 10 on the 10 pips. But I'm not going to go in with 10 pips. I'm going to stage in 5, and then I'll go to 3, and I should be able to get at least 8 pips, 8 lots in before I get a swing around that would move against me. So I'm going to lose 8 pips on the 3, and I'll make 2 pips on the 5, and I'll come away with a couple $100, and that's fine, because a couple $100, 200 days a week is $40,000 a year, right? So you're going to be okay. You're averaging your yearly winning expectation on having no spectacular days. That's how you have to trade. So you have to trade the lot size that you have to be consistent with gaining the average over the year that you're looking for. I've got, if my average win is $500, my average day is worth $500, I trade 200 days a year, I should be able to make, right, $100,000 out of that. Now, you might not be able to do that on a $100,000 account. You are trading 10 lots, you might have to be up trading 20 lots to do that, which would be a 50% return against your risk, right? So you're having to work through all these numbers. It's very difficult for me to do this in a video. I'm not going to put up a whiteboard and calculate it all out for you, because you either get it and you can figure it out on your own, or you're going to have to go to somebody who knows how to do this stuff and take some consulting or take a course or something to learn this stuff. I can discuss it and tell you what you need to do and how it all goes together, but there's more important information that goes on behind the scenes that I share with students who are actually serious and interested about how all these pieces fit together, because it isn't fitting together in a 15-minute video. When you're building your trading plan, this is what you do as part of the trading plan. Not just, well, I'm going to trade it between 5 a.m. and 7 a.m. and then I'm off to work, and I'm going to be a day trader, and I'm going to trade these 3 currencies, and I've got a trading a 5-lot position, and I'm using this broker and using this much leverage. And that's the trading plan. A serious trading plan is far more than that, and it has to be more than that if you're going to be risking $30,000 or $40,000 or $50,000 of your money in a trading account. What are you going to do? Listen to some fool that's telling you to look for an RSI signal to do something? It's just stupid. Oh, we're going to trade the NFP, and we're going to do this. We're going to put bets on either side of that, and it swings up and it takes it, and I'll make 5 pips, and everything will be okay. No, that's not going to work. Have you tried that? Have you tried it? Yeah, maybe it worked yesterday. But is it going to work the next NFP? And the one after that? Because the one that it doesn't work on, you'll lose 20% of your account. And in order to get that 20% back, you're going to have to make 30% return against your risk. Well, if you're having a hard time making 20% a year on your money, now you've got to make 30% just to come back and break even. How are you going to do that? If your risk management isn't nailed down, that you believe in that, then first of all, you're not going to have the ability to have consistent profits. Number two, you're not going to have the ability to recognize when it's time to throw the shit against the wall and let that thing run so that you can get large profits out of that. If you're dealing with an all-in, all-out situation, I'm going in with 3 lots and I'm coming out with 3 lots, well, that position is just going to run. You're stuck with that 3 lots. So the maximum you're going to make, how far do you think you're going to be able to run with that position? You know, you might get a couple of hundred pips out of that. So $30 times a couple of hundred pips, that's a good hit. It's not life-changing money, but that's going to be a huge part of your money that you make. But that isn't going to happen every day. And if you don't recognize when that opportunity is going to present itself, particularly when you have the ability to stage in lots and you're calculating, well, in a normal case, I need to have 8 lots that are hitting so that I make my 8 pips against that, or 5 pips and I make $400, or that average of $500 working with that 8. But when I get a runner and I'm going to start loading in the rest of my 15 lots that I have available to me, twice what I've originally gone in on a regular basis to make really good return money, now I've got the dry powder that I can throw against the wall, and instead of ending up 200 pips out on an 8 lot, I'm 200 pips out on a 15 or a 20 lot. So that's how you make the big profits. Not just throwing shit against the wall at 200 to 1 and hoping you don't lose your account. Because if you lose your account, and I don't know what the percentages are, but I do know that if you lose 50% of your account, it'll take you 100% return on your remaining balance in order to just get even. And so if you're looking at, you're struggling in your currency trading and you're trying to just make your light bill, you got a $10,000 account, you're trying to make 20%, simple 20%, you should be able to get that. I can teach somebody how to do that in about 15 minutes. But if you're going to lose $2,000 on a crappy trade, I mean, now you've lost 20% of your account, or you're trying to make 20% in a year. So you're going to spend the next year just getting that $2,000 back. I mean, you're not going to be able to pay your light bill, because if you take the $2,000 out that you're making, you'll still be $2,000 behind. You're always going to be behind until you make that money back and don't spend it, which means you don't pay your light bill for a year until you get that money back, because you need that money to have the $10,000 account. So 20% of 10,000 is 2,000. That pays your light bill, because you're trying to take your $10,000 and run that to 40. When really what you should be doing is trying to take that 10,000 and run it to 12,000, and then take that 12,000 and run that to 14,000 or whatever it's going to be. You're a hunter. You don't just walk in the woods slamming slugs out into the trees. You wait and you watch for signs of game, and then you go after that one and you focus on that. If that's the way that life tells us that we have to act to do normal things, that's what you need to do when you're trading. And it's a little bit more complicated when you're trading, because your money is at stake, and if you don't get it right and you lose your money, it's a horrible cycle having to rebuild that money. All these guys that have made tons and tons of money trading at 500 to 1 can easily go in there with a $30,000 or $40,000 account and show you how they made $20,000 today. But when they lose that $30,000 account. It's gone. But they don't have to worry about it, and they don't have to tell you about it either. They can just take $30,000 out of the $300,000 that they made, put that in the active account and trade that, and when that $30,000 makes $20,000 for the day or the week or whatever it is, they can put a video up and say, how I made $20,000 this week. You have to be very careful of the information that you're consuming balanced against what the reality, the statistical world that we live in around us, that we're trapped within a probabilistic can within that life that we're not going to be able to get out of in the long run. You may beat it in the short run, they're not going to beat it in the long run. So be very, very careful. If you have any questions or you doubt anything that I'm saying or you want to talk about this, send me an email. I'd be happy to chat with you. I'm not pushing courses or consulting. I don't do very much of that. First of all, because it is expensive. Most people go, I don't want to pay you that money. And second of all, everybody's looking for the magic pill. Well, that's okay. I'm retired. I don't need to spend my time working with people that I have to drag across the finish line. But I can help you for free if you have a serious interest and you have a question. Go, what do I do with this? I'd be happy to work with you. I do that all the time. I have a lot of fun working with you guys. And those of you that are emailing me, thank you very much. Send me an email sometime. Not when you have a question or something, just send me an email with a joke of the day or something. It's always fun to communicate with you guys out there as you're working through your trading. I don't need to try to sell you a course or whatever, but we're both traders. We're just at different levels of success or lot size or whatever that we're doing, and it's good to communicate with you. So don't feel bad if you're trading 3 minis and you're having a good time. Share that with me, because just because I'm trading 20 lot positions doesn't mean anything. Okay? All right. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.